This is Professor MoneyPigTrading. Today is June 13, 2021, and happy weekend. Hopefully you have a great weekend. And today we're going to talk about the US stock market. Basically, it's not at the peak yet. The past 1 or 2 weeks, I know a lot of famous people jump out like Bill Gates, Beckman. They said the US stock market is at the peak. Very likely soon will collapse, and you better sell your stocks. I'm selling my stocks, or I'm shorting the stock market, blah, blah, blah. I think in a way, it really depends on the time frame. In my humble opinion, I don't really think the US stock market is not at the peak yet, at least in the next 3 to 6 months. Here is some of the data I'm going to show you guys. And I know, like in terms of time frame, maybe the next 1 or 2 years, yes, that is the peak. And if you have a lot of assets like them, start to sell some of their assets, probably not a bad idea, right? You don't want to hold like so many things on the loan side, and if you have so many assets like real estate or some other investment, it definitely takes some time to clean up those positions. So it really depends on what you have and what's your perspective. So let's take a quick look. So really quick disclaimer, we're not registered financial advisor. This presentation is just for education purposes. Please invest at your risk. So this coming week actually has a lot of important economy data, especially on the Federal Reserve side. They are going to, on June 16, 2 p.m. Eastern time, they're going to make an interest rate decision, which will drive the market either to the upside or downside. And at 2:30, they actually have a FOMC meeting minutes where we can see what the Chairman Powell and other Federal Reserve chair had. What's their decision on the interest rates, and also whether they're going to continue the asset purchase or start to taper the asset purchase. On June 15, Tuesday, come back 1 day earlier, we actually have the retail sales, PPI, which is probably the most important econ data this week. That will determine how the inflation goes. If the inflation is bad, potentially Federal Reserve are going to say, hey, we're not going to change interest rate, but we're going to taper the asset purchase, and that could pull the market back. So you're going to see some price action on June 15 as well, based on the econ data. On Thursday, June 17, we have some also important but less important than PPI. Econ data is jobless claims and the Philly Fed manufacturing index. And if the manufacturing index is good, we can probably see some manufacturer stocks start to move, while a lot of growth stocks might pull back. So it really depends on how those econ and their data are. They will probably drive the market quite a bit. So let's look at the most important events, which is the Federal Reserve interest rate decision. And basically what the Federal Reserve Chairman Powell have been saying the past few months is Federal Reserve does not plan to increase any interest rate, at least. First, the inflation rate is above 2%, and second, the job market is back to normal. If the both doesn't come true, then Federal Reserve will continue to inject liquidity to the market to support the economy, the stock market, and hopefully the job market will come back to normal. So let's look at the inflation first. Right now, I know you probably heard a lot in this channel on CNBC, where anyone, like there's a lot of inflation going on. You're probably going to see it in Costco, right? And when you go buy something or anywhere in the grocery, a lot of like meat, wheat, the price just keep going on. If you look at the commodity chart, a lot of the prices, steel, iron, copper, all went up like 100% or more in the past 1 year. But the fear of inflation is actually decreasing because the China GDP growth actually slowed down, like we mentioned in the last video. If you haven't watched it, that's a very important video to watch on the fundamental side and macroeconomy side. And here's the link. Feel free to check it out. And because of that, the TNX, 10-year Treasury yield, actually just break the range between the 15.2 to 17.65, which has been the range for over 3 months and finally got broken. And this broken probably is confirmed. Right now it's testing the 14.62 EMA support, which is a pretty light line over here. You probably cannot see. If this level breaks in the next 1 or 2 months, we're probably going to see the 13.68, which is 150-day EMA support. If that level doesn't hold, we're probably going to see 13. And if the TNX continue to drop lower, we're probably going to see a stock market, SPY, QQQ, and all the growth stock continue to inch higher. And the other thing we have to see is whether Federal Reserve has been doing what they have promised to do, which is continue to inject the liquidity into the market if the condition has not been met. and which we have been seeing that's the right case. The red line is how much the Federal Reserve inject into the money, inject into the market with asset purchase, which is a red line. And we've seen the past 1 week, the number continued to increase, even though it didn't increase as much as we expect. But we do expect next week, if FOMC is positive, saying that they're going to continue to inject liquidity, we're probably going to see this red line jump up quite a bit, and probably we'll see the SPY price continue to go higher, which is a black line over here. And in last FOMC meeting, May 2021, Federal Reserve actually increased the SOMA balance, which is a liquidity injection, from $80 billion a month to from $40 billion a month, which is double. And they didn't change the interest rate. So what will happen this month, right, on June 16, Tuesday? Very likely, the first scenario is that both interest rate and asset purchase probably won't be changed, because if you look at the Bureau of Labor Statistics number, which is the employment rate over here on the y-axis, and the x-axis is the date between May 19 and May 2021, still lingering around 5.8%. Since January this year, the employment rate didn't really drop as low as around 2 to 4% as Federal Reserve hope. So that being said, very likely, or almost 99.99% in this FOMC this coming week, the interest rate won't be changed. And the asset purchase, in humble opinion, is unlikely to change since the condition is not met yet. However, there's a lot of conversation in the market that the asset purchase might be tapered while the interest rate is not going to be changed because the fear of inflation is so bad right now. But like I mentioned a few slides ago, the inflation is actually not as bad as you thought. Powell has been saying that this inflation is just temporary. The market will correct itself, and also this China GDP growth slowdown will also taper back a lot of commodity price, and hopefully will pull back down the inflation like we just mentioned earlier. So what will happen if the scenario 2 happen? The interest rate doesn't change, but the asset purchase start to slow down. So in that case, like we mentioned in a video, similar video like this one, the US stock market weekly recap, back to March 7, 2021. We'll put the link down here as well. So you can look back from there. But basically looking at the Federal Reserve liquidity injection and the SPY chart together, I know the chart's not very pretty, bear with me. You can look at the 2014 to 2016 data on the left side, and on the right side is a chart with zoom out, which is 2014 to 2021. And you can see in 2014 and 2016, Federal Reserve started to taper sometime in 2014, and the SPY price actually started to react and had a correction of 10% before Fed really started to taper over here. And then even though SPY actually had a 10% correction, it actually pushed back up really, really quickly and started sideways quite a bit until then there's some interest rate decision. This is the first interest rate raise on December 17, 2015. And SPY actually had another big correction, about 15%, and then started a V-shaped bounce back and never looked back and started to push back out, even though there's another interest rate increase back to December 15, 2016. So even though Federal Reserve saying that, okay, we're going to taper the liquidity injection, asset purchase, very likely we're going to see a short-term correction, 10, 15, 20, maybe 25, 30%, but very likely we're still going to push back up. Especially there's a news, in case you're not aware of, is right now the US actually make an agreement with the G7 countries that they're probably going to charge a 15% global tax, corporation tax. And if that happened, that means there's another corporation tax cut, even though it's not good for a lot of like multinational big companies like FANG, but it's probably going to help the whole economy and decrease a lot of uncertainty on the corporate tax side. 15% really going to benefit a lot of small cap, mid cap. So that's really good news. And I do expect if asset purchase start to decrease, yeah, we're going to see some short-term correction. But in the long term, if the corporate tax can be that low, I still think with the GDP continuing to growth, with the infrastructure plan in the next 5 to 10 years, I still believe the stock market will continue to inch higher from here. And looking at the SPY right now, the short term, the chart on the daily side, you can see the SPY right now has been lingering for all-time high for almost a month. and right now has a bull flag and ready to break all-time high. And last Friday, we actually closed at all-time high for 24.3. It's very similar to April 8, which we have been sideways and then started to push back up and finally had about a month and a half of a runway to the upside. So if Federal Reserve this Wednesday, they decide not to increase the liquidity interest rate and will continue to perform the liquidity injection, then we can see the spike continue to go higher and probably to mid-July when the FOMC start to report their amazing earnings. So the other factor to look at, and that's what the data science kick in, is we actually find another interesting feature is energy sector is always a lag sector to peak in each economy cycle in the past 3 economy cycle. So we just look at this chart. You can see back to April 2014. The Federal Reserve decided like, hey, we're going to start taper. We're not going to do a liquidity injection anymore. And like we mentioned, SPY actually had a pretty big correction, which is a black line over here. So, and if you look at it, this is the XLE, which is the energy ETF. Energy ETF continued to rise until April 2014. And that's the peak of that economy cycle. Then Federal Reserve started taper. Then the energy stock dropped actually quite a bit from the top 101 to 70, which is about 30% drop. But before that, energy stock actually started to run in early 2013 all the way to April 2014, which is run from 75 to 100, which is about 33% run as well. And at that time, April 2014, the crude oil actually reached about $100 per barrel. And that's the peak of that economy cycle. So one thing you have to keep in mind is looking at the energy sector. If that level start to push up to like pre-COVID high or even a lot higher, that probably means the Federal Reserve are still they will start to taper, stop liquidity injection. You're probably going to see the market going to pull back down. And this is the current XLE daily chart. Currently, our AI actually predict that the peak of this current economy cycle, XLE, which is the energy ETF again, will reach $68 to $78. The confidence interval is pretty high, 95%, but that's why we have such a big range because the time frame is still pretty long, probably 6 to 12 months from today. So we're expecting the forecasting range will start to narrow down once the time starts to approach. Again, the XLE target price at the end of this year or at the end of this econ cycle, which is probably the end of this year or at some point next year, is 68 to 78, which is our year-end target on XLE, which is 68.65. So yeah, definitely keep an eye on XLE. That can also be an important factor. Whether, again, Federal Reserve going to do the tapering and start to increase interest rate. So just to highlight, we have a really decent long-term investment program on Discord with nice winning rate and average return per trade. We also have a swing trading program, has a nice winning rate and average return per trade as well. Feel free to follow us on MoneyPigTrading.com, which will provide how to sign on with our Discord community. If you haven't checked us on Twitter, YouTube, Instagram, and Facebook, they are our account. And make sure to like this video and follow us to get the latest content. Thanks for watching. I'll see you guys next time. Bye-bye.